Tax loss harvesting. The strategy that saves thousands. The IRS is literally letting you turn losses into thousands of dollars. But 87% of investors have no idea this exists. Hey, I'm breaking down tax loss harvesting today. And by the end of this video, you'll understand exactly how to use it to keep more money in your pocket legally. Let's go. Here's the deal. Tax loss harvesting is when you sell an investment at a loss on purpose. Sounds backwards, right? But this loss becomes a weapon you can use against your taxes. When you sell a stock for less than you bought it, you lock in that loss. Then you use it to offset gains you made elsewhere, or even regular income. The result? You owe less taxes. In 2024, a single filer can deduct up to $3,000 in net capital losses against regular income. And listen, that $3,000 directly reduces your taxable income. If you're in the 24% tax bracket, that's $720 you keep instead of giving to the IRS. But here's where it gets good. If your losses exceed $3,000, you can carry those forward forever. Yes, forever. Into next year, the year after, as long as you need. Let me give you a real example. Say you bought Tesla stock at $400 per share back in 2021. You bought 5 shares, $2,000 invested. Then in late 2024, Tesla dropped. You're looking at a position worth $1,500. You just took a $500 loss. Here's what happens next. You sell those 5 shares. You lock in that $500 loss. Simultaneously, same week if possible, you buy a similar but different stock. Maybe Nvidia, or an S&P 500 ETF. This keeps your portfolio in the same market exposure without triggering the wash sale rule. The IRS wash sale rule is critical. You cannot buy the same security within 30 days before or after the sale, or you lose the tax benefit. But the moment you buy something similar, you're back in the market. Your money stays invested. You don't miss out on gains. But you've just created a $500 tax deduction. Part 2. The math that changes your life. Now let's scale this because most people aren't just sitting on one position. Imagine your portfolio over 3 years looks like this. You own 12 stocks. 5 of them crushed it. You're up 40%, 60%, even 80% on those. That's amazing. But guess what? 4 of those stocks failed. You're down 20%, 30%, 45%. By year 4, you're thinking about selling some winners to rebalance. You're about to trigger long-term capital gains taxes on those winners. Maybe you made $30,000 in gains across those 5 positions. Enter tax loss harvesting. You sell those 4 losers you've been holding. Combined, they're down $18,000. You lock in $18,000 in losses. Now when you sell those winners for $30,000 in gains, you only owe taxes on $12,000 in net gains instead of $30,000. If you're in the long-term capital gains bracket of 15%, you just saved $2,700 in taxes. $2,700. That's money you keep. And here's the thing nobody talks about. You can do this every single year. Legitimately. Strategically. It's not a loophole. The IRS built this in on purpose to encourage long-term investing. Part 3. How to actually do this. This isn't complicated to execute. Most brokers now have automated tax loss harvesting. Fidelity, Charles Schwab, Robinhood, they all have it. You can do it manually too. Every quarter, review your portfolio. Look for positions down more than 5%. Sell them. Immediately buy a similar replacement. Document it. Move on. The best time to do this is in November and December. People are naturally rebalancing for year-end. The market's usually volatile. You have more opportunities to harvest losses before the tax year closes. One more critical thing. This works best in taxable accounts. Not in your 401k. Not in your Roth IRA. Those accounts already shield you from taxes. Tax loss harvesting is specifically for the money you're investing outside retirement accounts. If you've got $20,000 in a brokerage account at Fidelity, and you're looking at $5,000 in unrealized losses, you're sitting on potential tax savings of $750 minimum. That's real money. Tax loss harvesting is one of the most underrated wealth building tools available. And it's completely legal. Use it. If this made sense and you're ready to actually keep more of what you earn, subscribe to this channel. We break down money strategies every single week that actually move the needle. I'll see you in the next one.